Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed success. All right, so Isabel, I'm searching through the website, right, of the company of our next guest, and I come upon this article, and it says, we are in the most attractive municipal bond buyers markets in recent history. I mean, those are like confident words, okay? So let's go to the person who wrote that article and a whole ton more on that website. Let's go to Tom Kozlik. He is head of Public Policy Municipal Strategy at Hilltop Securities. Tom, you are quite busy rattling off these articles. So explain to us why this is an attractive municipal bond opportunity. What are some of the opportunities out there?
Really talking to investors about. The first is the generationally attractive yields that we've been seeing. I'm comparing what it is that's been going on since the middle of April to kind of the end of 2023 going into 2024. There was a significant window of opportunity from an absolute yield perspective that opened up in the middle of this April, and that window is shutting. Even just over the last kind of 2-ish weeks, yields have fallen. And what I am talking to investors about is as the macroeconomic data starts to weaken, this very well is something that could start to bring yields down, whether it be the market does it or the Fed does it. And so the absolute yield situation, these generationally attractive yields, is definitely one of the big things that I'm talking to investors about right now.
What makes the Muni to Treasury ratios especially compelling right now? And how might those ratios behave if, for example, rate cuts come up sooner than expected?
Well, and that's a great point, because I think that MT, or municipal to Treasury ratios, that's one of the important relative value indicators that we look at. And on the long end especially, MT ratios are very attractive. They've been very attractive for about 2-ish weeks now. That is not necessarily just kind of a Fed to municipal yield comparison dynamic. One of the big things that's happening, and one of the big reasons that's happening, is because primary municipal market issuance has been very heavy, especially in recent weeks. And we've seen, as ratios have gotten attractive, we've seen crossover buyers come in. One of the things that I'm expecting to happen is as yields fall and as issuance falls, those MT ratios could start to fall. So the attractive relative value is another theme, another thing that I'm talking to investors about as well, in order to take advantage of this opportunity.
Yeah, so you mentioned, so municipal yields fell again last week. What is it showing you?
Well, one of the other things that I'm hearing from investors, there's a decent amount of uncertainty about what's happening. On the equity side, equity markets are doing very well again. One of the other things that investors are concerned about, there's still a decent amount of uncertainty about the Fed. I think that the macro data that came out last week, that's telling us that the macro environment might start to deteriorate sooner. And so it's a combination of what it is that the market is giving investors right now. You asked what's it showing me? What it's showing me is a situation where that window of opportunity is still very attractive, but kind of reading the tea leaves, it's an opportunity that is going to start to drop away over the next couple of weeks or next couple of months. And I'm really comparing this to kind of the beginning of 2024. There were a few weeks where that window of opportunity, it burst open. And I still remember in January, February 2024, talking to investors, folks, after that window closed, and folks were saying, we want to take advantage of those yields, but those attractive yields that we saw at the end of 2023, they went away a lot faster, right? So I don't want to be at the end of this year, the beginning of next year, talking to investors about the fact that they've missed this window of opportunity.
Let's take a step back. How are rising political and institutional risks like macroeconomic data, doubts around that, or the Fed independence changing the way you view the muni credit risk landscape?
Well, let me get even a little more specific, because one of the things that folks are talking to me about or asking me about is how what's happening in DC is affecting state and local governments, because there's some uncertainty there. So state and local governments are coming off a multi-year high from a credit quality perspective. Their credit quality probably peaked 2-ish years ago. A lot of that is because of the 2021 federal money that came in. A unprecedented amount of money came into to state and local governments and other public entities. And while some of that money has been spent down, credit quality, again, probably peaked maybe 2 years ago, credit quality is still very, very strong. There are some underlying issues in some situations, but credit quality is very, very strong. We're in 2025. I mean, even compared to just before COVID or 10 years ago, coming out of the financial crisis, there were real concerns about municipal credit quality. Right now, I think that credit quality is very strong.
All right, Tom Kozlik, thank you so much for joining us. He's head of Public Policy Municipal Strategy for Hilltop Securities, talking about the municipal bond market.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.